Hey, hello, hello. How are you doing, everyone? Doing well? Hey, Rael, how you doing? Right. Let's give it a second just for more people to join. Hello, Ale. Hey, Bob, how you doing? Hey, Juice. Nice hat. Hello, Aldo. Hey, Alex. Hey, Andy. Larry. Talk to me, Ale. I was watching the ugly, nasty price action on the indices, and I was like, oh my gosh! I just hope that Ale does not jump into a very aggressive entry trade. Let's see what happened. Hope you had a nice day today. Oh, you didn't? Oh, wow. That's nice. Hey, Saravanan. Andy, you did everything wrong today. Talk to me, talk to me, buddy. What you did wrong? Michael, Alex, Richard. Hey, boy. Look, I'm I'm not gonna lie. I really was thinking this morning that this session will be something like this because I mean, price action on the indices, it was just ugly, nasty barcode most of the day. And well, we are here trying to force entries, trying to actually have a trade. So let's go watch the every ticker on the chart, and let's see what happened. Let's see what you have. Hi, Monet. Where's this guy? Uh, Chicken Nugget, or what was her name? His name, Chicken Burger, or something like that. All right. Okay. So, all right, guys. I was thinking on him this morning also. Okay. So let's see Apple, guys. Well, let's take a look first to the indices. All right. So indices. Can you see here? We have been inside of the 5 minute opening range for 85% of the time of the day. Like all this time, we have been inside of this 5 minute opening range. Or well, no, no, I'm lying. We went into this range here. This is the daily gap. This is the difference between today's opening price and yesterday's close. We have been here 85% of the time, and it doesn't look like we are trying to leave that place. That's kind of the same thing with QQQ. Actually, QQQ this morning, it it was looking like stronger in the morning, but then this huge drop and then just consolidation all morning. So okay, so let's go back to Apple. What I'm gonna do, guys, today is I'm gonna try to find out some entry spots for according to our playbook, or at least to the intraday price action, and then we're gonna compare to our playbook. Remember, our playbook, or at least my playbook, says wait for indices to show you a clear trend or direction, then choose the ticker that is actually moving to the same direction, then go for the one with the relative strength or relative weakness, AA, and then go for the one with similar objectives or similar key levels, like position of the similar key level. So here you can see actually that Apple opened very similar to QQQ. I mean, it again, it didn't open that strong, but then it had this drop here, and then it started moving like something similar to QQQ. I mean, they are not twins here, but they were moving similar. So here, what I saw here, it's this break, displacement, and retest of two different things. This 1 minute opening range, this 1 minute opening range here, and also this pre-market high. So let me open something like this. So Apple was holding this 1 minute opening range, this pre-market high, and what was it doing indices? Well, they were kind of recovering here, but then this huge drop to the downside. So this is the opening price here. I actually got these two circles because they are gonna work in different tickers. So we had this rejection of the opening price here, and also QQQ was failing to reclaim this 1 minute opening range. So with this move here to the downside, I would expect Apple to actually go lower, but it was holding these key levels here. So again, this is out of my playbook, but if you can see that indices are dropping this hard, but your ticker is actually holding nicely on key levels, not holding on a random place. This is holding key levels. This is holding 1 minute opening range and pre-market high. Can you notice here? So if you are looking at this price action, your ticker holding key levels, I will take this area here as a uh, as my retest, and then with this candle here, this 1013 candle here, it's the very first one to actually open above pre-market high. So if you have a position here, if you open a position here, your risk will be at the very bottom of this consolidation. So your risk will be here, 212.55, and you will be aiming to this high of the day, or at least to the bodies. This high of the day, it was a 1 to 2.4 risk reward ratio trade. So again, two things, right? So this is not in my playbook, in Neto's playbook, because it's not moving on the same direction than the indices. However, what I want you to notice is how this is holding here key levels, pre-market high, 1 minute opening range, while the indices are dropping. So this is showing you relative strength because the indices are dropping, but this is holding and actually moving to the upside. So if you did something like this, in my opinion, this was kind of the only chance for a trade on Apple here. Anyone took Apple today? Ale, I kindly watch everything, and this trade on Apple you have there on the chart is just one thing I saw and I didn't take. Yeah, well, that's okay. That's okay, Ale. I think I like more to play inside of my playbook because the indices are like pushing your trade. So if indices change of character or something, that's another factor to consider if you want to stay on your trade or if you want to close your trade. So yeah, Boyd, I entered but didn't sell at high. and it went back down. Yeah, this, I mean, well, you actually had like one, two, three, four, five, six opportunities here, my friend. So at least you should trim something here, or maybe here on previous day high. What you were trying to do here, Boyd? How do you recognize that it's going down to prevent that? Well, I mean, you are just looking, you are just looking at the candles, right? So for example here, this is a good example of reading price action. So here you have one, two, three candles actually rejecting or failing to close above this high of the day. So what is these three candles? What are these three candles telling you? And then the next candle, closing below. So this is sellers stepping in right here. 213.70, 213.70. That was kind of the key level for you. But also, yeah, also here, QQQ was rejecting the edge of the 1 minute opening range. So a few confluences here, or at least a few factors here to consider, trimming your position, or trying to get something from your position here. And later, look at these candles here again, 213.70. So this 213.70 was kind of the level to fight here. Uh, Something like this. So can you see all these three, four candles uh, failing to close above this level, and this last candle here just touching but failing to reclaim? So that those are your signals, Boyd. Andy, I enter Apple long at 9:56, 84% rule, reclaim of 1 minute, 9:56. 9:56 here. Reclaim of what? Of 1 minute opening range like this. Well, something I don't like, and I wouldn't consider. Well, probably yes, it is the 84% rule, but here, I mean, these candles here are actually closing below these ones. I mean, I know this is the wicks of the candle, but I mean, in it's like the bodies here are actually going lower than the first candles here. So I wouldn't consider this 84% rule. But anyways, I mean, if you took your trade here, how long you held until this to 1370, or just to previous day high? Rael, when scaling in general, do you trim immediately when it hits the level, or wait the price to reject? Well, I usually when I'm aiming for a key, I'm sorry. When I'm aiming for a key level, it's kind of like I have my finger in the trigger, and if I see any sort of reaction there, I just sell, because I like to sell on strength. Uh, but if I see that it's actually breaking the level, I wait for a few seconds until like trying to see the real reaction there, if there's any reaction there. Ale, boys, if you are not sure when to take profits, you should scale at high of the day and to RR. Yeah, upper sticks are bad, right? Yeah, they are. I mean, they are not bad. It's just a signal that sellers are stepping in here, right? Sellers are stepping in here. It's kind of this signal here. So these long wicks to the downside, and then this huge candle, huge green candle, are telling me that on this area, 212, buyers are stepping in, as you can see along the day. And well, finally here, that I mean, sellers won the battle and they broke this 212 level. And what's going on? Well, that's what is happening here. But that's how you read the price action, boys. I mean, the wicks are telling you part part of the story. Alex, yeah, uh, what's the price action video of Jack, Alex? If you can share the link, that would be awesome. Uh, Gabriel, Amazon. Well, let's go to Amazon. All right. So if you have any question about this Apple price action or this Apple opportunity, just let me know in the chat. Let's move to AMD. So AMD, look at these candles here, right? Like half an hour before market open, we had this huge movement to the upside, and then it retraced a bit, um, tried to go back again. This, I want to show you. I want to show you this. This is the importance to have clear clear levels. So this 122.16, I want to show you the daily chart. This 122.16, look at this. Look at this. It's a very, very, very important key level. This is the pivot low on the daily chart. As you can see here, this was a very important line here. But if I go back, I mean, if I take this line to here, it's actually being resistance, resistance, resistance. And then it's with this break, this is the actual start of the rallies, right? I mean, can you see here? It's resistance, resistance, and once we break this 122, it goes all the way up. So what are we waiting for the next day for AMD? If we break and hold, if we break and hold this 122, guys, it's gonna be a party. It's gonna be a party at least to this 132. I'm not saying it's gonna take it in one day, but maybe like in 1 week, and this is gonna be a party. I mean, when once we reclaim and hold this 122, it's gonna be a nice way up. And this is the actual. What are you looking here, guys? This is the actual change of character of AMD. So this is a higher high. Can you see here? We are finally breaking this downtrend here. So we are creating a higher high. So what is expected here? Maybe a retest of this 114.45, and then something like this, right? That will be the expected move. Now that we actually broke this level and we are creating here a higher high. Can you see here? Anyone have a question about this? How this is how how we are looking at this? 122, yes, 122. Actually, AMD there will be a good swing up. I would like to wait, like for the retest and maybe take a swing here, 120, 122. Yeah, to the upside. Like maybe like 6, 8 weeks out. Yeah, that will be a nice swing. Mm-mm-mm. All right. Are your levels the same as Jack's on a lot of these stickers? I think they are. I mean, because we draw levels on we draw levers on a different way, at least on lines and everything, but it's the same reasoning, right? I mean, I'm always looking for the previous highs of the day. Can you see here? It's actually the highs and lows of the previous days, and then I go to the 15-minute chart for relevant key levels. For relevant key levels on the previous days. But so it's kind of the same reasoning, it's just a different way to do it, right? Okay, so for AMD guys, for AMD, I actually didn't see any good opportunity here. I was looking for a spot to retest maybe this opening price, but we never got it. And this let me show you here. When we broke this, I was expecting for a retest like here on the 5 minute opening range, but we went too deep into this area here. So it was just consolidating here in the 1 minute opening range. It tried to break, it went back here, but I never had like a nice entry here. So maybe this was kind of the only, and this is not even touching the level. Can you see here? It's well. Let's see. This is the 5 minute. It's not retesting here. I know. When you're taking puts, you can be a little bit more aggressive, but I don't like it. I don't like it because look at the indices, what they were doing. Also, this time 11:11 was um, not a good entry time for me. So I just don't see any good entry point for AMD here. Anyone took AMD today? And the AMD long 939 when I don't like 939. Um, like the reaction on the pre-market high maybe. But well, what I don't like from your play, Andy, it's that the indices are going to the opposite side. So again, I like to have my trades on the same side than the indices. That's and because that's what happened, right? I mean, with the indices dropping, that's exactly what happened here with your trade. And also, not sure if you tried like something like this, like when you reclaim this. So if you were having your risk at the bottom of this and what you were looking for 123, that's a 1 to 2 risk reward ratio trade. I mean, you were stop out like 4 or 5 minutes later, right? uh, Neto, I see that you have some level with some text on it. How do you do that? Well, this is a tool. This is a tool that I use. It draws automatically the pre-market, previous day, and previous week levels, and the 1 minute and 5 minute opening range. Uh, you can look for it. There's a member of the community. His name is Mina. If you look for him, Mina, Mina. If you look for him, he can send you like the invite for this tool. It's a paid tool, but it's like $3 or something like that. And I mean, it's super cheap, and it saves you a lot of time. Okay, AMD order block on the 1 hour. Order block on the 1 hour. Let's see. order block on the 1 hour. 121 50, 121 50. No, brother, that's just too far, like 4 months away. No, remember, guys, if you are trading like we are, like, I mean, this is not the scalping per se, because we are not like entering for seconds. This is not scalping, uh, but I mean, we are not aiming to hold our trades for too long. So if you are using the 1 hour time frame, just make sure that it's not that far. I mean, if you are using key levels for this, uh, other than the daily for the external liquidity, I mean, don't go that far. Like, I mean, if it's the 1 hour, maybe I will go like 10 days. Yeah, 10 days back, maximum. Like I do with my 15-minute chart key level. They are like 1, 2, maybe 5 days back, but not more than that, because then they are not like valid. Again, if you are trying a different higher a different time frame, like the 1 hour, uh, yeah, I wouldn't go that far. Um, how long are you looking for all levels? Well, anything but on the daily, not on the 15 minute or the 1 hour. The daily, I can go back for weeks or months, maybe not years, but just months. Like, okay, well, my next level here, like, for example, if you go watch Tesla now, we are having levels from the I think from February, so 3 months away. But they are on the daily chart, not on the 15 minute or the 1 hour. Okay. How do you think this crawling across all graphs in TradingView? If you go to the oh, not here. If you go to this layout, you can actually click on this interval, crosshair, time, date, range. If you click on here for the symbol, you can have the same symbol on all the charts. All right. Okay, so that was AMD. Now Amazon. This is the trade I took this morning, and it actually worked very nice. It actually worked very nice. So what I did is this was something like here. Yeah. So what I did here is it was 9:46 again, 10-15 minutes after market open. Uh, so indices were already uh, below the opening price, so we were going to the downside here. And I watched this break and, and retest of this 5 minute opening range. I know this went a little deeper inside of this 5 minute opening range, but it was below the 1 minute opening range. So it was between the 1 minute and the 5 minute opening range. So once it came back here, and someone asked me, "Hey Neto, but look at this candle here with this huge wick. Uh, what's going on?" I was I was I mean, I was looking at the indices, and yes, buyers were stepping in here, but I was trusting the indices will push down my trade, because, and let me tell you something, this doesn't happen everywhere. This happened with Amazon, and because I do trade Amazon and AMD in a very constant and regular basis, I know these kind of things, right? Because I know my ticker, I know its personality, I know how it reacts to the indices, I know how it reacts to key levels. I know how it reacts to news, to So this is kind of something I got from the experience of trading Amazon on a regular basis. So if it was holding the below the 1 minute opening range and it was reclaiming this 5 minute opening range, and indices were pushing down here, can you see they were SPY was below this 587.29 key level on the 15-minute chart, and yeah, and here QQQ was actually breaking the opening price here, or the 1 minute or 5 minute opening range. So that gave me conviction for taking my trade on the next candle. The next candle, can you see it was very neutral candle, but because the indices were dropping, look what I got on the next candle here. So I got this very impulsive move to the downside. I was tempted to trim my position here. This was 1 to 1.3 risk reward ratio trade. So I decided to wait at least for the pre-market low or the previous day low. And when we hit this, I was ready. Not sure who asked this a few minutes ago, but I was ready to trim my position here. So I took 1/3 of my position here. Then, so just to give you context, I got 50 contracts of Amazon here. They were Amazon 210 puts for this week expiration. So I took 15 contracts here. I took 20 contracts here when came we retrace here to this previous low of the day. Then we got this impulsive move to the downside here. So on this break, I got another 20 contracts here. So I was just leaving 15 for looking for continuation to the downside. Uh, but what happened here? So the indices started to chop right here. So Amazon was losing momentum here on this 210 key level. Well, and that's another thing. 210 has been a key level for Amazon for many months. I mean, if you remember last year, we took some weeks to break the 200 key level, but once we broke the 200, then the 210 was kind of a brick wall. So this 210 was being kind of my final target for my contracts. Or if we break this 210 and held below, that will be an awesome trade. But the indices were not helping here. So I took like 10 more of my contracts here, and I took the rest here. These were like a little bit negative, but maybe a little bit below break even. But I didn't want to wait for all the movement here because I was already in good profit here. So actually, this trade, like right here, it went all the way to 36% from here. So I was like super comfortable riding these runners, but I wasn't willing to to let them be super red right here. Like, I mean, they came back later, but I mean, here I was like, okay, well, this is it, and I'm fine with this. So that was my trade here. The reason I didn't want to stay longer on this trade, it's because right here on this consolidation, right here on this consolidation here, you can see what the indices were doing. They were just chilling, choppy. It was super choppy day here for the indices. So once the indices were just ranging here, Amazon actually gained some momentum here, and it broke this consolidation that it was kind of similar than the indices. So that's why I decided to cut my trade right here. And tell me, guys, who snagged Amazon with me? Chen, did you enter at the close of the second candle on Amazon? Yeah, it was this one here, 946. Yeah, 946. Um, Michael, can you explain how you look for trades and do you wait for the yes. With such a huge move, how did you determine your contract size quickly and manage your risk? Well, I usually, Chen, I have a fixed dollar amount for my trades. So, different than Tony, for example. Tony, what he does is he's always taking like 50 contracts or 100 contracts of anything. Uh, but I don't, because I'm not, uh, I don't have, I still don't have like, like the mental muscle to just WhatsApp the contracts. So what I do is I stay consistent with a fixed dollar amount. So my trades, they usually are like between $5,000 and $10,000, uh, and and my risk is usually like 15% tops of that. So 1,500. So that's pretty much my risk, my fixed dollar amount for my trades. So what I do is I usually do the math, right? Like for example, today my my contracts were $1.91. So I took 50 contracts. I took 50 contracts, and I mean it was close to $10,000. And I mean that keeps me on my range of where I can see the numbers on my on my broker, and I still feel comfortable. If I mean either way, even if I'm winning or if the trade goes against me, I mean that's a number I can manage to stay on a trade without emotions taking decisions for me. Um, Gabriel, yeah, Gabriel, I almost did the exact same trend. I think I got it in a little earlier, like on the previous candles. This 9:45 maybe. Ale, were you okay with these choppy, sudden, huge candles in the morning? I was also looking at this trade, but it was kind of very impulsive, too impulsive. Uh, well, I mean that they were they were not that impulsive here on Amazon. This is a very regular candle here. Well, Ale, this is actually a very nice opportunity to talk about this again and again and again. You need to get to know the personality of your tickers. I mean, this is very important because just as this opportunity here, Ale is saying like, oh well, I for me those were like very impulsive candles. They were very big candles. But for me, I'm looking at this, and this is just like 211 to maybe 210. So they are like 50 cents candles. They are not too bad. For me, they are not too bad. I mean, I'm used to this. So, but again, this is experience, right? This is looking at the Amazon chart every day for days, weeks, months, and now years. So this is something that you just get with experience. Uh, Gabriel, I did Amazon today, 944, 944, 944. This one, good. I mean, good is work, but what you were looking here, Gabriel? Like maybe something like this. order blog here, something like that. I mean, I was actually looking at this, but I didn't like that. Like I don't know. This was just too deep. So I just waited for this impulsive candle to actually break this 5 minute opening range, and then I took it. And I was sharing, I shared I shared with the guys on the mastermind, and then I shared this. Yeah, I'm gonna have something on the chat. I hope this works for you, or like at least uh, tells you something. It's too big. Okay, give me 1 second. Give me 1 second. Let's see if I can do it now. This is something that I want to share with you guys because it's important to understand. It's it it's about uh, wait. Now, all right. So this is something that I share with you guys on the community. I was talking to someone, to another member on the mastermind community, and he was like, "Oh, Neto, I mean, I think that was too aggressive. Why you entered there?" And I was explaining this. This is how the price actually moves, right? So to move the price up, it it's require a lot of energy. I mean, buyers stepping in, pushing capital, and pushing demand on it to push to move the price higher. But for the price to go down, I mean, you don't need anything. You can actually just leave it like that. I mean, you don't even need sellers to step in. I mean, if just the buyers are like exhausted and they don't do anything, you don't even need sellers for the price to go down. And that's exactly what I'm saying here. Like, prices rise with active buying pressure, but can fall passively without it. So that's why, not sure if you have ever heard like uh, es- elevator down, escalator up for the price, because the price drops like super quick, but when it starts going up again, usually it's grinding slowly. So that's I mean, this is explaining that. So I just hope that this helps you to understand how the price moves and how I feel. And this is one of the reasons I feel like I'm way better at puts than calls. And it's not like I like more puts, but I can take more risk, or be more aggressive on my entries for puts. And even if the trade doesn't work immediately, when the price wants to go up, it goes slowly. But if the price wants to go down, it's gonna be like that. It's gonna be fast. So that's why I like call put a little bit more. But I mean, that again, that's my personality. That's my style. That's my taste. There's a lot of traders like Tony. He said that he doesn't like puts. He likes, he's a true believer that the market is designed to go up, and also me, right? I mean, I'm a true believer of that. It's just like I like to take opportunities. I like to take opportunities like this. And yeah, Jack say he don't like puts either. And let me tell you why. Because also Jack has, the responsibility on his back of hundreds of people watching him trading live, and it's like he's feeling the pressure that puts work like faster or quicker. So sometimes it's harder for him to explain the reasoning behind a short trade, and like trying all of the people understand that and actually jumping into that trade, because again he's like feeling accountable for not only for his trade, but also for explaining the trade to others and trying other people to take the same thing. So that's why he doesn't like it too much. But I mean, Jack likes puts. It's just like he doesn't like to take them live. uh, yeah, they are easier for sure, Ale. All right, guys. So let's continue. I just hope I really hope that, and you guys can stop me anytime if you feel that I'm just like saying very obvious things or very basic things. You just let me know. It's just, this is just me trying to explain something that sometimes could listen like very basic or easy, but there's a lot of people that they are actually getting a lot of value of this shares that I give. So if you ever feel that, hey Neto, that's just too basic, let's skip that, you just let me know. All right. All right, so let's go to the next one. The next one is Nvidia. This was super easy. This was a super easy trade. I actually I didn't take it because I was on I was in the middle of my Amazon trade, but I was watching this on from the corner of my eye, and I was like, oh, this was super obvious. So we had this break and retest of the opening price. This is the opening price here, guys. So this was super obvious because it was the opening price. Also, this was kind of an order block here. So, and also look at the indices. What the indices were doing? Well, SPY was rejecting the opening price, and QQQ was actually rejecting the 1 minute opening range. So I got these circles here for you to understand better where the reaction is. And right here, I mean, if you took this trade here out of this order block and you were aiming to here low of the day, this was a 1 2 almost 3. Well, if you just, yeah, I mean, right here to low of the day, this was a 1 to 3 risk reward ratio trade. But you should be like uh, quick trigger to take profits here, because we got this B-shaped recovery here and then some consolidation, and then it went higher, right? But this was a nice trade here. This was super clean. Again, I was looking at Amazon at this moment, so I didn't take this. But this, when I was watching the whole board, I was like, oh, that was super obvious. But I don't like to have several trades open at the same time, so that's why I didn't take it. Um, okay, let me go to the chat. Thank you, Patrick. Thank you. Gabriel, this has helped me a lot. Just my stupid decision that held me back. Yeah, I mean, hesitation, Gabriel. So listen to me. Hesitation comes from not being confident about your strategy, right? Or you'll tell me it's hesitation because you are not confident about your strategy, or you are not confident about your execution. I mean, how fast you can pull your orders, or how or maybe I don't know, like your trade management. So you need to figure out, Gabriel, what is holding you back about taking the decisions. So is it that you don't trust your system? Is it that you don't trust your your criteria? Is it that you don't trust your execution? What is it? And once you find your answers, start working on that. All right. Michael, I seem to get in when the market is really choppy, and then I sit on the trade too long and get stopped out. I need to only trade. Yeah, that's something that I do, Michael. I don't like to trade beyond the 11 in the morning uh, mark, and that's me. In my opinion, after 11 in the morning, like the momentum is faded, or unless it's something like yesterday, like indices were like, you know, indices were in drugs yesterday. They were rallying so hard. That's a day you want to stay, right? That's a day you want to stay. But days like today, after 11 in the morning, they are so boring. Just as you said, I mean, they start being super choppy, and the premium is just being eaten. So you are just losing money there. So sometimes I just decide to cut my trade there and make the most out of my day, instead of sitting here just looking at the chart, looking these lines going up and down with no inside of a range. Um, Andy, I remember Jack and Tony said not to look for shorts since higher time frame still looks bullish for all the stocks. Yeah, I mean, like, I think it was last week. Not sure if you remember. We took or I took an Nvidia trade, and I was trying to hold it. Uh, I was trying to. I mean, I managed my trade and I was, taking profit, but I was expecting for the price to go lower to 111. I remember it was 111, and also I think SPY was at 547 or something like that. So in the higher time frame, those were like super clear demand zones. So it will be like super hard to break those levels to the downside. So if you have that in consideration, that, I mean, you can actually uh, decide over taking a trade or not, or just like me. I mean, I saw the opportunity for Nvidia, so I took the short opportunity there, but I managed to cut my trade right at this level, because that was the lower it will get, and that's exactly what happened. So when I was journaling, I remember, like, I was just transferring my charge to my trade seller, and I was like, oh, I remember this song, so I should take more profits here when we hit the first time instead of the second one, because it was a lower percentage. But I mean, that's what they say. I mean, you need to build your narrative at least on the 15 minute, and then decide what you want to do, right? So if you are getting to a strong key level or strong supply area, well, you don't want to go long right below that level. I mean, you want price to actually break and then hold above that level. So you need to build your narrative on the higher time frame, but you can always take your trades on the smaller time frames. Um, Gabriel, it's mainly holding through drawdown for me. Yeah. Rael, same. I was only looking for longs today, as the higher time frame structure is still intact. Michael, also, if I notice that the Greeks kill my profits at it sits, I can be above my entry, but still, yeah, that happened to me. Let me show you. So, for example, on my Amazon trade, when, yeah, I cut my trade here, because even when this was my entry point, this trade here was like 2 or 3% negative. So my break even now was 210.80 instead of these 210.90. So yeah, I mean that happens with the Greeks because the time decay is playing against you. Um, all right. So that was one Nvidia trade that I watched here. Again, this was kind of obvious. This was super easy. If you took it, that was a super nice trade. And let's go to the next one. Tesla. Anyone can tell me how to take a Tesla trade here before 11 in the morning? It was inside of the 5 minute opening range all of the time. So can you see here? All of the time inside of the 5 minute opening range. So no trade for me on Tesla. And what happened with Microsoft? Microsoft was pumping. I don't know why. It was pumping nicely here. Wait, wait for the key levels. What's going on here? Okay, here at the key level. So here we have this break, nice displacement and retest of the previous day high. Again, this is out of my playbook because Microsoft was pumping, and what was happening? What was happening with the indices right here? Oh, they were dropping like a rock. They were dropping so hard, and actually Microsoft was pumping. But okay, so let's consider that you are not looking at the indices here. So you have here a very clear break and retest of previous day high. Oh, here previous day high. So you open your position here, your risk, news on Microsoft. Okay. Antitrust regulators to accept Microsoft Office Teams offer. Yeah, I hate Microsoft Office Teams. I hate it badly. I know this is probably like the safest tool for corporates, but I just hate it. It's ugly. So so here we have this break, displacement, and retest. Very clear and nice retest here on the previous day high. So you open your position here. You open your position here. Your risk is very clear here at the bottom of this retesting candle, and you should be aiming at least to this 250. That's a kind of, like the strike kill psych number. Well, it's not a round number because, but like most of the tickers trade every 2.5 points. So 450 here. So you got these. If this is a 1 to 2.11 risk reward ratio trade, this to 450. But actually, if you take it like here 453, because this candle was amazing here. It was a almost 1 to 3 risk reward ratio trade. But if you were just aiming to this 450, that's a 1 to 2 point something risk reward ratio trade. Or even if you move, your risk here instead of the bottom of this week just to the previous day high, like I don't know, like just because this was a 1 to 2.5 risk reward ratio trade right here. So this was a nice opportunity here, and maybe the other one was maybe here. I'm reading someone took uh, two trades, 9:52 and 10:06. Yeah, 10:06. Your Central Time, right? So yeah, 10:06. Yeah, this here, and what you were looking here, Rail. What was your 454.60? So okay, so you took like your trade here, 454.60. Okay, but you tried here. risk was here. Well, this was a very nice trade here. I mean, even if you take it like here, this is the previous pivot high. This was a 1 to 3.9 risk reward ratio trade. This was a very good trade here. Even if I move like this one, like let's say like okay, well, to the next one here, it was a 1 to 2.9 risk reward ratio trade. Uh, and the indices were actually pushing up now, and you will expect okay, well, it's going higher, but what happened? It started fading even when the indices were pushing higher. So, well, that's the thing, right? That's the thing. I mean, sometimes they work, sometimes they don't. I like to take my trades on the same direction than the indices, because if the indices change direction, it's easier for me to spot if I need to be like like more aware of managing my trade right here. Uh, Felipe, after market open, what levels do you mark out? I see Jack and Tony marking levels after market open, and I don't really understand why is that. So usually what I do is I mark the daily gap, but here it's automatic here. Uh, this tool actually does it for me. So the daily gap means the difference between the yesterday's close or previous day close and today's open. So that's what we call the daily gap. And then they also mark the pre-market high, pre-market low, previous day high, previous day low, and the 1 minute and 5 minute opening range. Those are the levels they like, and those are the levels they use. Uh, and later in the day, I mean, they start using like order blocks and other kind of different levels, but those are the main ones. Mm, okay, so what's the next one? Meta. Okay, Meta actually behave a little bit like the indices. Well, not a little bit. They actually look like twins, right? Like it had a high of the day, then it started dropping, and then it tried to reclaim the opening price or the first candles here, and then they drop. So the only thing that I saw here, it's this actually was here. So it was this break and retest of the 5 minute opening range. Can you see here? This is the 5 minute opening range. So, and what was happening? What was happening on the indices? Huge rejections here. Remember that I told you, okay, well, I have two circles. I have two circles for reference. Well, this is one of the times they work nicely here. So if you had your your trade like here, you opened your position here, the risk was at the top of these candles, and you were aiming to a 1 to 2 risk reward ratio trade. It was actually this pre-market low level, and you got it here. You got it here. I mean, again, I'm just showing you different opportunities here. I will be stopped like here, and then it went down again. But look at this. I mean, this is awful. This is awful price action. Everything is inside of this range. So this is awful. But I mean, if you need to spot an opportunity for an entry, I think it will be something like this. Something like this one. Right. What's this one? Palantir. Palantir was ugly here. Uh, inside of this range, inside of the 5 minute opening range, and with the minute getting a tighter range. Look at this. I mean, this is just ugly. This is just ugly, my friend. So, but again, this is consolidation after a few days pushing up to new all-time highs. So this is expected, right? I mean, push up, consolidation, creating a base, and once it creates a base, it's probably it's gonna go higher again. It's gonna go higher again. Uh, all right, guys. So that that's all for me. That's all for me today. I hope that everything we share here, it's in some in some form adding to your arsenal, adding to your knowledge base, and it's being helpful for you. So if you have Neto, you think they let you do live training? They want me to do it, but I don't feel really comfortable. So actually that's one of the reasons that we started doing these live trade reviews because well, English is my second language. English is my second language, so I wasn't feeling like really comfortable. I know. Everyone said like, okay, well, but I mean, we get everything, we understand everything, but if it's a live trading, I need to talk faster, maybe to talk a little bit clearer, and I need practice, to express what is my reasoning behind my play. I know this is. uh, so yeah, so I don't know. I mean, I'm just practicing how I do this, and maybe later on the year I can start joining the live training. I mean, uh, it's just I don't know how it will work because I don't actually join the live trading because for me it's noise because even when we trade the same strategy, we have different styles, right? Like I do like to go with the indices strength, and they like to take the one with the relative strength or the relative weakness. So uh, it's just different. I mean, it's the same strategy, just different style. So I don't know how it will work, like on the same call. Uh, so well, let's see how it works. I really like how Jack's how Jack does it. So I wouldn't like to be like some sort of um, you know making noise in his call. But let's see what happened later on the year. Guys, don't forget. But speaking on Spanish, don't forget that this Friday we will hold a meeting in Spanish. So if you speak Spanish, si tú hablas español, this Friday we're gonna have it again. It's not a master class. It's not a it's actually not a like a super technical session. It's more like networking. And if you have very specific questions that you never ask in English because you don't know how to express or something, and it's easier for you to ask in Spanish, that's gonna be your opportunity. So don't forget this Friday. I think it's 4 p.m. Eastern time. We are gonna have our Spanish speaking session. So don't forget, please, Aldo. Not sure if you speak Spanish. I'll see you there. And if you are just curious how the Spanish speakers talk, they look like parrots and they sound like parrots. So that's gonna be us. So you are also invited. So thank you guys. Remember, like this video, subscribe to the channel, and I'll see you tomorrow. Bye bye.